Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 119, recorded here on June 9th, 2024. This podcast is for entertainment only, not investing advice. Please do your own homework. Well, we'll start with the market update outlook and then jump into the top Bitcoin news of the week. Lots of stuff to go over as always. And so with that, we'll get right into it. Stock indexes fell slightly on Friday, but still finished higher for the week after U.S. non-farm payrolls rose much more than expected in May, dimming hopes for interest rate cuts anytime soon. Oh darn, the economy is strong. Employers added 272,000 new jobs, while average hourly earnings over the past 12 months ticked higher after 3 straight monthly declines. Uh-oh, people are getting paid more too. Can't have that. U.S. Treasuries sold off, and the dollar strengthened on the news, prompting traders to dial back their expectations for how much the Fed might cut rates from earlier this week, when data on manufacturing and job openings came in softer than expected. The jobs report followed Thursday's rate cut from the European Central Bank, its first since 2019. The Fed will offer its decision on rates next week after its June 11th 12th policy meeting. All three major stock market indexes posted a winning week, with the S&P 500 edging 1.3% higher, the Dow Jones jumping 0.3%, and the Nasdaq Composite closing up 2.4%. Chipmaker and AI favorite NVIDIA fell slightly on Friday, but ended the week up 10%, setting a new record high on Thursday after topping $3 trillion in market value for the first time on Wednesday. All right, looking ahead, it's a big test this week to see what holds the most sway on the markets. Is it the Fed or AI? The Federal Reserve's June decision arrives along with its updated projections for the path of interest rates, inflation, and economic growth. The Fed statement and Chairman Jerome Powell's press conference are due on Wednesday. With the market pricing in a near certainty of no move on rates, the dot plot will be the main focus coming off the strong May jobs figures. The markets are now pricing in only 1/4 point cut in 2024, with the odds of a September 1/4 point cut falling to 50-50. Before the bell on Wednesday, the markets get the May CPI figures. Economists forecast a 0.3% month-over-month increase in the core inflation rate and a drop in the annual rate to 3.5% from 3.6%. A significantly hotter or cooler number could see some volatile repositioning, especially in bonds, ahead of the afternoon Fed release. But on the AI front, focus will be squarely on Apple's WWDC event. Apple kicks off its annual developers conference on Monday with a keynote address that is perhaps the tech giant's most widely anticipated speech since the iPhone was introduced nearly 17 years ago. Analysts say it's a pivotal moment as the company starts a new AI-driven chapter. And Tesla shareholders will meet on Thursday during the company's annual meeting to vote on 12 proposals. The proposals include the high-profile proposal of ratifying Elon Musk's compensation under the CEO pay package that was previously approved at a special meeting in 2018. Earnings schedule for next week includes reports from Oracle, Broadcom, and Adobe. Zeekr Intelligent will also publish its first earnings report as a publicly traded company. All right, jumping into the top Bitcoin news. First up here is from the Bitcoin.com week in review. So let's see what interesting articles they've flagged here. Ricardo Salinas Pliego, one of the wealthiest billionaires in Mexico, has urged his followers to purchase Bitcoin as a hedge against the devaluation of fiat currencies. Salinas Pliego recommended purchasing Bitcoin in response to a social media post reporting on the fall of the value of the Nigerian naira under a Satoshi. That was kind of interesting, actually. So a Satoshi is actually worth, which is 1/100th of a Bitcoin, is actually worth more than one Nigerian naira now. I'm sure there'll be many more to come. At this moment, Tesla's Elon Musk holds the title of the wealthiest individual on the planet, as reported by the Forbes Real-Time Billionaires list on June 1st, 2024. However, there exists a potential future where Bitcoin's creator Satoshi Nakamoto could surpass Musk's fortune. Given the current value of Bitcoin, the price would need to increase by just 210% for the anonymous creator of Bitcoin to become the wealthiest person globally. Nigerian artist Davido has been accused of perpetrating an outright scam after pocketing over $468,000 from selling his recently launched meme coin. Uh-oh! A prominent Nigerian crypto enthusiast claims Davido's actions create problems for many legitimate crypto businesses and startups operating in good faith. Yeah, that's why we don't shitcoin. Let's see. Some Russian companies have turned to using crypto to settle payments and protect themselves from potential secondary sanctions from Western countries. At least two top metal producers have transacted using USDT, the largest stablecoin in the crypto market, as the G7 and EU mull more sanctions against alternatives for these operations. This was a pretty significant piece of news. U.S. banks reported an alarming increase in unrealized losses and a growing list of institutions at risk of failure in the first quarter of 2024, according to the latest U.S. Federal Deposit Insurance Corporation data. The FDIC report highlights $517 billion in unrealized losses and identifies 63 banks as vulnerable, marking a concerning uptick in the financial sector's instability. So yes, the Federal Reserve would love to cut rates, and they'll be looking for any opportunity they can. And of course, other central banks have already started cutting rates. I think Bank of Canada, the EU, and I'm sure there'll be others. So money printer go burr. Okay, next up is from CoinDesk. This article was posted on June 6th. A little bit of a price update. Bitcoin falls back after attempt at 72,000, but Fed, US data, and global rate cuts may bring new all-time highs. Bitcoin is increasingly compressed in a narrow range as the latest effort to rally past $72,000 stalled Thursday. Bitcoin rallied to 71,700 earlier during the day following the European Central Bank's rate cut, but quickly tumbled, nearly dipping below 70,000 before bouncing to 70,600 at press time, down about 1% over the past 24 hours. Well-followed market analyst Skew noted concerted spot selling activity on crypto exchanges Binance and Coinbase and a simultaneous buildup of short perpetual futures positions on derivatives marketplaces weighing on prices. CoinGlass data shows a significant leverage buildup around the $70,000 and $72,000 price area that could be liquidated in case of a breakout from the narrow trading range in either direction. The broader crypto market also experienced a pullback, with the CoinDesk 20 index down 1% over the last 24 hours. Decentralized exchange Uniswap's token, Oracle Network, Chainlink's Link, and Layer 1 blockchain Near declined 3 to 5% in the same period. Cosmos-based blockchain Injective's native token defied the broader trend, gaining 5% following the project's tokenomics update that aims to make the asset more deflationary, reducing supply via token burns. Oh, shiny new thing. Despite Bitcoin's struggle to get past the $72,000 level, analysts call for an imminent break upwards to new record highs as macro conditions are turning in favor of risk assets. Central banks in the developed economies have started easing monetary policy, with the ECB and the Danish Central Bank both cutting benchmark rates by 25 basis points today. Being the latest examples, Bank of Canada lowered rates earlier this week and its Swiss counterpart cut in March. The big question going forward is if the U.S. Federal Reserve might join the rate cutting trend, and while some members of that central bank have suggested any monetary easing could be a 2025 story, recent data has shown softening in both inflation and economic growth. Tomorrow will bring the government's May employment report, and a weak read could boost the odds of an imminent Fed rate cut. And coming later this month will be the latest inflation data. The CPI released next week might potentially be the trigger for a new all-time high for Bitcoin. QCP said in a market update there may also be added momentum to the rally as the market prices in rate cuts. Standard Charter's Forex and digital assets research head Jeffrey Kendrick reiterated his $150,000 price target for Bitcoin by year-end in a Thursday report, and noted the possibility of a breakout to new all-time highs in the next few days. If tomorrow's payrolls data are friendly, I would expect a fresh all-time high to be reached over the weekend, he said. Well, we're into the weekend, and that didn't happen, but we don't really care about price action. We're just going to keep staying humble, stacking sats. All right, next article is from Cointelegraph. This was posted on June 7th. A little spike in the Bitcoin network fees. Bitcoin network transaction fees temporarily soared to nearly $52. The Bitcoin network is currently experiencing a sharp increase in network fees driven by 332,000 unconfirmed transactions as of 12:05 p.m. Eastern Time on June 7th. Network fees at the time hit 514 sats for high priority transactions and 513 sats for low priority transactions, with prices climbing to around 520 sats per transaction earlier in the day. In United States dollars, this represents $50 to $52 in fees per transaction. Priority fees have since dropped to around $46 per transaction. According to blockchain reporter Colin Wu, the 332,000 unconfirmed transactions are suspected to be the result of a centralized exchange, OKX, collecting and sorting through wallets, though this wasn't confirmed by the time of publication. Concerns surrounding miner difficulty, high network fees, and miner profitability on the Bitcoin network have come into sharper focus post-halving. The slashing of the block reward from 6.25 Bitcoin to 3.125 Bitcoin at the end of April has significantly impacted miner profits. Bitfarms reported a 42% drop in mining revenue for the month of May, the first full month since the latest halving event. The Bitcoin mining company disclosed in its end-of-month report that 156 Bitcoin was earned in the month of May compared to 269 Bitcoin in April. The Bitcoin miner also explained that temperatures in its Argentina facility were unusually low in May, recording some of the worst weather conditions in 44 years. These poor weather conditions caused the company's Rio Cuarto facility to shut down for 8 days, contributing to a drop in the total number of Bitcoin mined. Since the start of 2024, Bitcoin miners in the U.S. have spent a total of $2.7 billion on electricity, despite rising computing difficulty and lower rewards. According to analyst Paul Hoffman, since the start of 2024, Bitcoin mining in the U.S. has consumed an enormous 20,822.62 gigawatt hours of electric power. The analyst added that the amount of energy used by Bitcoiners since the start of 2024 alone could power 1.5 U.S. households, 1.5% of U.S. households for an entire year. In April, it took an average of $52,000 to mine a single Bitcoin. Following the halving event, the cost to mine a single Bitcoin has more than doubled to an average of $110,000. So that's interesting. And I'm not sure what this Paul Hoffman, comment really means. I mean, we don't apologize for the use of energy for Bitcoin. It's a worthy and important use of power. What we should be focusing on instead is increasing the amount of power that we're able to generate. And that includes all sorts of different ways of generating power, not just solar and wind. All right, next up, this one is from bitcoinnews.com. And this was posted on June 7th. Riot Platforms acquires 12% stake in Bitfarms Limited. Interesting. We just talked about Bitfarms in this last piece on the Bitcoin mining price, so perhaps they're having a little bit of trouble. On June 5th, 2024, Riot Platforms, a prominent Bitcoin mining company, announced that it had acquired a 12% stake in Bitfarms Limited, a rival in the Bitcoin mining sector. This move comes amidst a turbulent time for Riot, with significant market activity and a contentious report from short seller Kerrisdale Capital. Riot Platforms disclosed in a press release that it purchased 1,460,278 common shares of Bitfarms at an average price of $2.45 per share, totaling approximately $3.5 million. This acquisition increased Riot's ownership from 11.63 to 12% of Bitfarms' outstanding shares. According to Riot's official statement, Riot currently intends to requisition a special meeting of the company's shareholders, at which Riot intends to nominate several well-qualified and independent directors to join the company's board of directors. Riot has expressed concerns about Bitfarms' corporate governance and believes that the current board's performance has been subpar. This acquisition followed a period of intense scrutiny and speculation surrounding Riot Platforms, particularly due to a damning report from Kerrisdale Capital. Let's see. Kerrisdale Capital is an investment management firm founded in 2009. The firm is known for its research-driven approach, particularly in the realm of short selling. Kerrisdale Capital often publishes detailed reports on companies it believes are overvalued or involved in fraudulent activities. The investment management firm has also made headlines for its critical stance towards the Bitcoin mining sector. On the same day as Riot's announcement, Kerrisdale Capital released a strongly worded report claiming that Riot Platforms would collapse and criticizing the Bitcoin mining industry as a whole. Well, there's no question Bitcoin mining is a really tough business. Tough business. Because you can't control the price of your product that you're selling, which is Bitcoin. And, your costs, if you're not really good at managing your costs, particularly the cost of electricity, that's the big one, you're toast. And especially after the halving event, there's always a lot of pressure because the amount of product that you can produce with mining each successful block gets cut in half, which really sucks. So tough business. Kerrisdale's report alleged that Riot does a far better job playing energy arbitrage games and issuing stock than generating shareholder value by mining crypto. The report also accused Riot of diluting shareholder value by continuously issuing new stock to fund its operations. The firm wrote, if Riot were to stop issuing stock, it would be forced to start drawing down on its cash and Bitcoin holdings. Kerrisdale Capital's aggressive stance didn't stop there. The firm's accompanying post on social media declared, we are launching a war against Bitcoin miners, an industry of snake oil salesmen. They further noted that they were betting against Riot's stock, but remained long on Bitcoin, anticipating a rise in its price. This statement faced severe backlash from the Bitcoin community, with some suggesting that the investment management firm is betting against math itself. The impact of Kerrisdale's report on Riot stock was immediate. In the first hour of trading on June 5th, Riot shares plummeted by 9.6%, dropping to $8.84. However, following the announcement of its increased stake in Bitfarms, Riot's share price rebounded, closing at $9.65, a slight decrease of 0.21% from the previous day. It had risen since then to $10.35 at the time of writing. The acquisition of Bitfarms shares is part of a broader strategy by Riot to consolidate its position in the Bitcoin mining industry. In late May, Riot made a $950 million bid to acquire all of Bitfarms shares. Riot claimed that Bitfarms founders were not acting in the best interest of all shareholders and that their offer was a fair valuation of the company's potential. Bitfarms, however, rejected Riot's offer, stating that it significantly undervalues the company's growth prospects. A special committee from Bitfarms requested customary confidentiality and non-solicitation protections, which Riot did not respond to, leading to the rejection of their proposal. Riot's move to increase its stake in Bitfarms and nominate new directors indicates its commitment to influencing the governance and strategic direction of Bitfarms. The company stated it would continue to review its investment in Bitfarms and could either increase or decrease its stake, depending on various factors, including Bitfarms' financial position and market conditions. Riot's acquisition and its intentions to influence Bitfarms' board are subject to Canadian securities laws. Riot has filed an early warning report as required by these regulations, ensuring transparency of its actions. Riot emphasized its concerns about Bitfarms' governance, saying, "We have serious concerns regarding the board's track record of poor corporate governance. Riot plans to nominate independent directors. Riot Platforms' acquisition of a significant stake are reflective of a larger trend in the Bitcoin mining industry." And the rest of this is pretty much saying the same thing. And so, yeah, I think they're going to, get a stake. They got the stake. They're going to get some board directors in there, and eventually they're going to buy, Bitfarms. That's what's going to happen. I think they're looking to consolidate one of their weaker competitors. That's what it looks like to me anyway. And I'm sure you'll see more of that happen with some of the smaller especially the public ones. But there's probably private miners too that are smaller, that are good acquisition candidates for some of the larger mining concerns. But again, tough business. Wouldn't want to be in it. Don't really like investing in it. Just hold Bitcoin. Next article is from No Bullshit Bitcoin. This was published on June 6th. Robinhood to acquire Bitstamp in $200 million deal. So another acquisition happening. The acquisition of Bitstamp is a major step in growing our crypto business. Bitstamp's highly trusted and long-standing global exchange has shown resilience through market cycles. Through this strategic combination, we are better positioned to expand our footprint outside of the U.S. and welcome institutional customers to Robinhood, said Johan Kerbrot, general manager of Robinhood Crypto. As the world's longest-running cryptocurrency exchange, Bitstamp is known as one of the most trusted and transparent crypto platforms worldwide. Bringing Bitstamp's platform and expertise into Robinhood's ecosystem will give users an enhanced trading experience with a continuing commitment to compliance, security, and customer centricity, said JB Agrafto, CEO of Bitstamp. Bitstamp, established in 2011, operates offices in Luxembourg, the UK, Slovenia, Singapore, and the US. The exchange holds over 50 active licenses and registrations globally, serving customers across the European Union, United Kingdom, United States, and Asia. So very interesting move here. It's a centralized exchange. What do you want to say? You can use it to buy Bitcoin if you want, but you better get those coins off the exchange. Not your keys, not your coins. In other news, this is from bitcoinnews.com. This was posted on June 1st. Unchained helps University of Austin create $5 million Bitcoin fund. The University of Austin and Unchained, a prominent Bitcoin financial services firm, have joined forces to create a unique long-term Bitcoin endowment fund. This initiative aims to raise $5 million, all of which will be invested in Bitcoin and held for a minimum of 5 years. The collaboration is set to pave the way for other academic institutions to explore innovative financial strategies involving digital assets. And personally, this is something I think this is a great idea for schools, private foundations, is establishing endowment in Bitcoin. That the money can just kind of sit there and grow and compound over time, and then in I think 5 years is perfect. Then you start drawing down a small portion of it, and then as Bitcoin's value continues to grow over time, that small amount that you're drawing out is negligible to the principal, and you could really use that to do a lot of good things. So very, very smart move here. Announced on May 31st, the partnership between Unchained and UATX marks the establishment of the first long-term endowment fund held entirely in Bitcoin. The initiative is designed not only to integrate Bitcoin into the university's financial framework, but also to explore alternative financial models that could potentially offer greater resilience compared to traditional endowment strategies. The announcement reads, "This initiative reflects the core missions of both Unchained and UATX, emphasizing sound money principles, resistance to censorship, and challenging the status quo." Joseph Kelly, CEO and co-founder of Unchained, has been a driving force behind this initiative. In a statement on X, Kelly expressed his excitement about the collaboration. The world needs more great founders, and we are excited to bring together our communities to build something new, he said. Kelly's personal commitment to the project is evident in his donation of 2 Bitcoin, valued at approximately $137,000, to kickstart the fund. He added, I've been very passionate about what UATX is building in Austin. I've seen the values the organization places on free speech and on building a modern academic institution that's integrated with the marketplace. One of the key components of this partnership is the secure management of the Bitcoin endowment. Unchained will provide its collaborative custody vault, a robust security solution designed to protect the university's Bitcoin holdings from malicious actors. This custody model ensures that there's no single point of failure, enhancing the security and integrity of the endowment. This sentiment is echoed by Thomas Hogan, the associate professor joining the Center for Economics, Politics, and History at UATX. University endowments are about serving students, and Bitcoin provides a unique opportunity for advancing UATX's commitment to cultivating future generations of leaders and innovators, Hogan said. The collaboration between Unchained and UATX is not just about financial investment, it's also about fostering a deeper connection between the academic and Bitcoin communities. To achieve this, the partnership includes a series of joint marketing campaigns, events, guest lectures, and debates. These activities are designed to educate the public about the benefits of Bitcoin and its potential to revolutionize both finance and education. The initiative aligns with the core missions of both organizations. For UATX, it underscores the university's dedication to free speech, market integration, and challenging the status quo. For Unchained, it reflects the company's commitment to sound money principles and resistance to censorship. Both UATX and the Bitcoin community are building institutions for the future at a time when their respective worlds of higher education and financial services are captured by entrenched powers which limit freedoms through censorship, Kelly stated. By integrating Bitcoin into its endowment, UATX is setting a precedent for other academic institutions. The university hopes to demonstrate that alternative financial models can offer more resilient and innovative ways to manage endowment funds. This move comes at a time when academic interest in Bitcoin is on the rise. In recent years, several prestigious universities have ventured into the world of digital assets. For instance, Stanford University's Blythe Fund increased its portfolio exposure to 7% in Bitcoin via BlackRock's Spot Bitcoin ETF earlier this year. Similarly, Ivy League institutions like Harvard, Yale, and the Massachusetts Institute of Technology have explored Bitcoin investments as early as 2018. The interest in Bitcoin is not limited to universities. Major hedge funds are also increasingly investing in Bitcoin ETFs. Out of the top 25 hedge funds in the United States, 13 have entered the market by investing in spot Bitcoin ETFs during the first quarter of this year. Notable examples include Point72, which held $77.5 million worth of Fidelity's Wise Origin Bitcoin Fund, or FBTC, at the end of the first quarter, and Millennium Management, the largest institutional holder, with approximately $2 billion invested. These investments by hedge funds and academic institutions alike indicate a broader acceptance of Bitcoin as a viable financial asset. They also highlight the potential for Bitcoin to serve as a long-term investment vehicle capable of offering significant returns and hedging against traditional financial risks. It's a savings tool, folks. That's what it amounts to. Put your money in there and don't have to worry about it. The initiative's success will depend on its ability to engage the community, secure the endowment funds, and demonstrate the resilience and benefits of holding Bitcoin as part of a university's financial strategy. So again, really terrific to hear. Would like to see more of this, and we wish them luck. Next up is also from BitcoinNews.com. Some interesting news from El Salvador. This one was posted May 31st. Ocean Mining Pool chooses El Salvador as its headquarters. Ocean Mining Pool, backed by prominent figures like Jack Dorsey and Bitcoin core developer Luke Dash Jr., has chosen El Salvador as the site for its global headquarters. This decision aligns with Ocean's mission to decentralize Bitcoin mining worldwide and takes advantage of El Salvador's progressive stance on Bitcoin. Ocean, led by CTO Luke Dasher and President Mark Artemico, will operate its international business development hub in the capital city of San Salvador. Dasher stated, El Salvador is on the leading edge of Bitcoin and Bitcoin mining adoption, and we believe Ocean's presence here will help to advance these efforts here and create new opportunities for El Salvador and elsewhere. The decision to set up in El Salvador was contrasted with the restrictive stances in other regions. Artemico highlighted, to further our decentralization efforts, we needed a global presence, and El Salvador was the obvious choice. With places like Venezuela and EU imposing legislation to ban Bitcoin mining, El Salvador's political stance was in stark contrast and a beacon of hope for the industry. El Salvador made history in 2021 by becoming the first country to adopt Bitcoin as legal tender. This initiative was aimed at boosting financial inclusion and fostering economic growth. Despite facing some domestic challenges, the international Bitcoin community largely supported this bold move. The country's commitment to Bitcoin has earned it the nickname Bitcoin Country. The government of El Salvador, led by President Nayib Bukele, has taken significant steps to integrate Bitcoin into the economy. Initiatives like the Chivo wallet, which offered $30 in Bitcoin to users and plans to mine Bitcoin using geothermal energy from volcanoes, highlight the nation's innovative approach. However, these efforts have not been without hurdles, including technical issues and public skepticism. Nevertheless, Ocean's decision to establish its headquarters in El Salvador has been well received by local officials. Stacy Herbert, director of El Salvador's Bitcoin office, expressed approval of the Ocean mining team's decision, highlighting that it validates El Salvador's growing Bitcoin-focused culture. She emphasized that this environment offers essential tools for global entrepreneurs to succeed in a Bitcoin economy, and extended a welcome to Ocean and other companies promoting Bitcoin adoption. Jack Dorsey, known for his advocacy of Bitcoin, is expected to play a significant role in Ocean's operations in El Salvador. His involvement underscores the company's commitment to fostering a decentralized Bitcoin mining ecosystem. A core objective of Ocean Mining Pool is to promote decentralization within the Bitcoin mining industry. The company plans to implement technologies like Stratum v2, which aims to shift power away from a few large mining pools to a broader base of miners. Stratum v2 is just the start. For us, it goes much deeper and is about shifting the balance of power away from a handful of pools and bringing miners of all sizes closer to the nucleus of Bitcoin, said Bitcoin Mechanic, Ocean's global head of sales. Operating from their new hub in El Salvador, Ocean aims to ensure maximum reach and adoption of these decentralization features within a favorable regulatory environment. This strategic location will enable Ocean to leverage El Salvador's supportive stance on Bitcoin, promoting innovation and growth in the Bitcoin space. Ocean is not just focused on mining, it is also committed to contributing to Bitcoin education and community development in El Salvador. The company's plans to support initiatives like Bitcoin Beach in El Zonte, a coastal town that has developed a thriving local Bitcoin-based economy. By investing in local education and development, Ocean hopes to support the organic growth of circular economies based on Bitcoin. Their efforts are expected to create new opportunities and further Bitcoin adoption both locally and globally. Ocean Mining's non-custodial, transparent, and permissionless platform is poised to play a crucial role in empowering miners worldwide. By choosing El Salvador, Ocean is positioning itself at the forefront of Bitcoin innovation and adoption. Okay, next article is from No Bullshit Bitcoin. This was posted on June 3rd. Michael Saylor to pay a district record $40 million settlement in DC income tax case. This is the largest ever income tax fraud recovery in the district and the first lawsuit under the amended False Claims Act, which encourages whistleblowers to report tax evasion. Saylor was accused of evading over $25 million in income taxes with the help of his company MicroStrategy from 2005 to 2020. The lawsuit stated that Saylor and the company asserted he resided in Virginia or Florida, where income tax rates are considerably lower. Florida remains my home today, and I continue to dispute the allegation that I was ever a resident of the District of Columbia. I've agreed to settle this matter to avoid the continued burdens of the litigation on friends, family, and myself, Saylor told the New York Times. Interesting. I guess you got to be really careful about where you spend your time and where you own property. And if you're in a high tax state and you want to get out of that high tax state, the best thing to do is to sell everything, get out, and don't go back. Or if you do, stay a couple days in a hotel or something. All right, next up is, and the last article, it's actually an opinion piece from Bitcoin Magazine. I thought it sounded interesting. Why Joe Biden Hates Bitcoin. And this was posted on June 6th. Over the last 4 years, President Joe Biden has demonstrated a clear reluctance to support the Bitcoin and cryptocurrency industry, as recently evidenced by his veto of significant legislation and the broader stance of his administration. On May 31st, Biden vetoed a pivotal bill that would have allowed highly trusted financial institutions to custody Bitcoin and other cryptocurrencies. And then they have a tweet quote in here of the letter that he wrote. The legislation in question had garnered bipartisan support in both the House and Senate. It aimed to provide a regulatory framework that would enable banks and other financial entities to securely hold digital assets, thereby further integrating Bitcoin into the mainstream financial system. Proponents of the bill argued that such a framework would enhance security of spot Bitcoin ETF funds by distributing the honeypot of coins currently held by only a couple institutions, promote innovation, and help facilitate the growth of the Bitcoin industry. However, Biden's veto reflects his administration's lack of support for the industry, where the president previously compared crypto traders to wealthy tax evaders. The Biden administration also published a report attacking Bitcoin and proof-of-work mining, promoting a central bank digital currency, instead stating a U.S. CBDC would have the potential to offer significant benefits. Biden wanting to embrace a CBDC, which would allow the federal government to have complete control over their citizens' finances, further shows his true colors and reasoning for not supporting Bitcoin. Recently, Joe Biden's Department of Justice arrested the founders of popular privacy-focused Bitcoin mixing service Samurai Wallet and charged them with money laundering. U.S. Senator Cynthia Lummis defended the Samurai founders, stating that this stance contradicts existing Treasury guidance, common sense, and violates the rule of law. Renowned whistleblower Edward Snowden also commented on the arrest. And there's a tweet quote here of Edward Snowden. The Department of, in quotes, Justice has once again criminalized the developers of an app that restores financial privacy. The way to fix this is to make private money private by default. Privacy must never be exceptional, or they will make it criminal. In addition, the Democratic Party in general has also shown a reluctance to support pro-Bitcoin legislation. Key figures like Senator Elizabeth Warren have been particularly vocal in their opposition to the crypto industry. Warren has often criticized cryptocurrencies for their environmental impact and regulatory challenges, and infamously stated that she is building an anti-crypto army to address what she perceives as the industry's threats to financial stability and consumer protection. In stark contrast, former President Donald Trump has recently embraced Bitcoin and cryptocurrencies. On June 1st, 2024, Trump announced that his campaign would accept Bitcoin payments through the Lightning Network, facilitated by OpenNode, a Bitcoin and Lightning Network infrastructure provider. Trump has recently said he will ensure that the future of crypto and Bitcoin will be made in the USA. I will support the right to defend the right to self-custody to the nation's 50 million crypto users. Trump has also recently stated he is very positive and open-minded to crypto companies and that our country must be the leader in the field. There is no second place. Despite the Democrats' stance, the Bitcoin industry is becoming an increasingly influential force in U.S. politics. Recent polls indicate that crypto voters are largely nonpartisan, with no significant leaning towards either the Republican or Democratic parties. This demographic represents a substantial and growing portion of the electorate, with over 50 million Bitcoin and crypto holders in the United States. As the 2024 presidential election approaches, Bitcoin policy is emerging as a critical issue for candidates to address. The evolving stance of political leaders on Bitcoin and cryptocurrencies underscores the growing importance of these assets in shaping economic and regulatory policies. For Biden, his reluctance to embrace Bitcoin is alienating a significant segment of the voter base. Crypto advocates argue that clear regulatory frameworks and mainstream acceptance of Bitcoin would drive economic growth, foster innovation, and enhance financial inclusion. However, the Biden administration's focus remains on preventing that from happening. The rise of Bitcoin has introduced new dynamics into the political landscape, while Bitcoin operates in a nonpartisan manner, appealing to individuals across the political spectrum. This does not mean all politicians will embrace it. Joe Biden and the Democrats are turning a nonpartisan technology into a partisan issue. In conclusion, the Biden administration and a majority of Democrats favor a CBDC over a decentralized cryptocurrency like Bitcoin. A CBDC aligns more with Biden and the Democrats than Bitcoin, and Bitcoin is less appealing to them because it does not help them achieve their aspiring authoritarian goals. As the 2024 presidential election looms, the role of Bitcoin policy in shaping voter preferences and political strategies is becoming increasingly evident. With over 50 million Bitcoin and crypto users in the United States, the decisions of political leaders on digital assets will likely play a pivotal role in the upcoming election, reflecting the growing significance of Bitcoin and the broader economic and political landscape. And my comment on this is, even though I don't really, like politicians, I don't trust them. They're going to say whatever they're going to say to get reelected, et cetera, et cetera. It is quite interesting and perhaps a positive development that it's become a political issue, and it's clear if you don't get behind it, you're gonna lose a lot of voters. And so this, I think, helps create a more favorable environment in the United States than where it was sort of trending here recently. I think they're still going to go after self-custody to some degree, and for sure, privacy. We're already seeing that, and I don't see that changing with the new administration. But the concerns about banning Bitcoin and that you can't deal with it at all seem to be fading by the day. First with the Bitcoin ETFs being approved, but then now with this becoming more of a political issue. Anyway, I guess I look on the bright side of it and say it's good that there's this level of focus now that's really pro Bitcoin. And I guess we'll see. Time will tell what this really means and whether politicians keep their promises or not, which I'm not going to hold my breath on that. And finally, just wanted to highlight this week's featured post on Bitcoin Fortress Substack. It's entitled Bitcoin as a Tool for Activism, the Importance of Freedom Tech. And so I go through some case studies of dissidents who and other organizations that have been using Bitcoin to help those who are trying to fight for freedom, especially in very authoritarian parts of the world, which seem to be more and more every day. And with that, I'd like to thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. I do like to listen on Fountain, where I earn sats just for listening. You can also follow my Substack. It's located at bitcoinfortress.substack.com. There's also links in the show notes. And you can follow me on Nostr. My NPub is included in the show notes, along with all of the articles that we went over, so you can read it yourself. And with that, I will talk to y'all next week. Bye-bye.